I was an unprofitable trader for 3 years and now I've received over 217 payouts. And what changed everything for me was daily bias. But the market has changed, and if you are struggling to find consistency in your trading, you keep blowing accounts, or you still doubt your ability to execute, then this video is for you. Because this new way of finding daily bias has increased my accuracy by a lot and has gotten me results like these, and these. And the best part is that it only takes 2 minutes per day, and it's so simple that even a beginner couldn't mess it up. When you don't understand daily bias, your session probably sounds something like this. Maybe the market's gonna go up. Wait, no, actually, maybe it's going to go down. Maybe it reverses here. Actually, it might just keep pushing. And if this is what your session sounds like, you'll have a very hard time finding trading profitability, and you just end up taking countless losses in the process. Because no decision will be based on a system, but on how you feel. No matter what market you trade, one rule never changes. You need to pick the direction you're taking a trade in. But this doesn't fix everything. Because how many times have you thought, I know the daily is bearish, but something feels different today. This looks like it's about to reverse, but you don't take it because you think you'd be breaking the rules. Or worse, you follow the daily chart and get chopped up or lose. And this is where the new way of finding daily bias comes in. And this new way of finding daily bias is something I haven't seen being talked about anywhere else. Yet, it has increased my accuracy dramatically. Just one small detail can change absolutely everything. This new way makes you way more precise every single day, and it helps you avoid ranges where the bias is basically meaningless. So we're going to start on the daily chart. We're going to mark out key higher time frame levels, the bullish and the bearish ones, and you're going to ask yourself one question: what is the market choosing to respect? So let me show you this on the charts. The 3 key levels that we are going to identify are highs and lows, order blocks, and fair value gaps. So let's quickly mark these out. So we see the most recent price, and we are going to identify highs and lows first. This is going to help us understand what the market structure is currently looking like. And you can see that the market has very recently swept a daily low. We also have a swing low, and the market has failed to sweep the daily low and has reacted bullish. We are also reacting out of a daily extreme, not only one, but 2. And we can see that the market is already reacting off of it, creating one more order block, which is this engulfed candle. Now, when we're looking at fair value gaps, we have one right here that the market reacted from and went bullish. And that is pretty much it. There is one right here, but this doesn't apply to most recent price. So now that we have identified the key levels, the question is, what is the market choosing to respect? And this is where daily bias can be simplified. You don't try to predict what the market is going to do. You ask yourself, what is the market already doing? And you can see we react out of a low. We react out of the order blocks. All of this is giving us a strong bullish push. And now that you know that the market is choosing to respect bullish key levels, that is exactly what you want to trade. But how many times have you picked the key level and the market goes in your direction as you are in a trade, but then it turns all the way back to your break even as you were so close to your take profit? And what I'm about to tell you next is incredibly important to solve that. But first, we have to understand, we identify the key levels, we ask ourselves, what is the market choosing to respect? And if the answer is that the market is respecting more bullish key levels than it is respecting bearish key levels, then your daily bias is going to be bullish. So this is the traditional and very effective way of identifying daily bias. Yet there's one problem with it, and that is a lot of the trades are going to turn into a loss. And that's because you're missing this one thing, which is you don't just ask yourself, what is the market choosing to respect? You also need to ask yourself, where will the market stop? Because if you've ever traded on a lower time frame, which if you're watching this, you've obviously have, you know that the market doesn't just move straight up. It moves higher, moves lower, moves higher, moves lower. That's what a bullish trend is. But what happens to a lot of traders is that they execute, the market moves, and then they hold through all of this pullback. In worst case scenario, it even turns into a full loss. And how do you solve this? It's by asking yourself, where is the market likely to stop? And this is where one concept comes in, which is the extremes. So you never target the swing highs. You always target the extremes. And the easiest way to see this is on the 4-hour chart when you have the bullish daily bias. So what you would do is you would look at the last order block, what traders would call a supply zone, and you're going to mark it out, and you want to make sure that you take profits at this area, not at the swing high. This is what destroys a lot of traders, is targeting that swing high. So you only target this order block, and you can see how exactly it acts as a magnet. Or another example where we are still bullish on the daily chart, and what you're going to target is this extreme order block, and a little bit after we tap it, and notice what happens. If you were targeting the swing high, the market stops as it has a big barrier. So if you were to target the swing high, notice how you would have gotten so close to your take profit to just see everything evaporate. And by the way, if you want a full in-depth course on direction, we have it for free on mastertradingdirection.com or the second link in the description. This also has a daily bias exercise, an interactive exercise for you to master daily bias with explanation videos. So just go to mastertradingdirection.com, which is fully free. And even if you understand what I just showed you, you'll probably still end up on the wrong side of the market and still are frustrated with another loss on your strategy. But here's the problem. The daily chart is amazing and it will give you a clear direction, but sometimes it's a bit too slow. Because we might still be bearish on the daily, yet the reversal is incredibly obvious. And that usually happens at these pivotal areas, be it the high or the low. And this is where the new way comes in. With this new way, we are able to be quicker on our feet. And what is the new way? The new way is identifying the daily bias also through the 4-hour chart. Because notice how once the 4-hour fails, we go on a deep dive. Once the 4-hour fails, we go on a deep dive. The 4-hour fails, we go on a deep dive and we sweep the lows. And then afterwards, we have a strong engulfing after we sweep the lows, and this is where the bullish trend continues. All of these, you could have been quicker on your feet by simply looking at the 4-hour chart. So every single time that you're trying to find what the daily bias is, I want you to look at the 4-hour chart and ask yourself, what is the market choosing to respect on the 4-hour chart? Because you could have shorted this move down. You could have longed this move higher. All of these pivotal moments happened first on the 4-hour chart, and that is what makes it so much more accurate, because the 4-hour chart is a large enough chart for us to identify what we want to see happening today. Now here's a rule that makes this insanely simple. If the bias on the daily chart and the bias on the 4-hour chart are the same, we have high probability conditions. If they're different, then we have lower probability conditions. Keep in mind, I didn't say low, I said lower. I still execute on them. I just know that I have to wait for a higher probability, lower time frame entry. And if you want to know more about that, exactly how I approach the markets, then check out the first link in the description, which is Funded Trading Blueprint. And this is why the 4-hour is so accurate when trading NASDAQ. We're trading from 9:30 a.m. Eastern Standard Time to 11:30 a.m. Eastern Standard Time. This is about a 2-hour window, but the daily chart accounts for 23 hours. So what do you think is easier to forecast, the next 2 hours or the next 23 hours? On the daily chart, we're trying to make a decision that applies for a 2-hour window based on a candle that represents the whole day. And this is why traders struggle with the daily bias. Daily bias can be incredibly simplified, as you've seen. You were just missing the 4-hour accuracy. And now you know that you can use the 4-hour as a strong directional filter. And just a reminder that if you want a full in-depth course on direction, we have it for free on mastertradingdirection.com or the second link in the description. This also has a daily bias exercise, and this also has an interactive exercise. So this is how the new way of identifying the daily bias has incredibly increased my accuracy in the market. And if you want to see my full strategy here on YouTube, then watch this video right here. And if you want to check out the best prop firm with code KEMAL that always applies the best discount code, check out Funded Next right here.